What's good, YouTube? We're back with Dad Vester here, and I just want to say my shit works. um, Obviously the market's going up, so everyone's going up. But I just wanted to make a quick video to show we're at an all-time high, and we kind of recovered after this dip in September, like end of September. Now it's October 1st, and I guess the market really isn't really going up that much today, but I haven't looked at it since this morning at like 10, so maybe it came back down, or maybe it's going back up. But point is, I wanted to compare my portfolio to the S&P 500 because that's sort of my, so like the past year it's 22%, year to date it's 21%. So basically I just wanted to see how I stack up. 21% versus 22. So I always have the S&P 500 up because I love it. Okay, it is coming up. So there you go. But okay, so let's go. What we're looking at year to date, 13%, and I was 21%. And over the past year, 16% versus 22%. So I am definitely tied to the S&P 500. I'm investing in it actively every day. You can see that plus sign on VU. So I'm slowly putting it into VU. I don't have a ton in there. What do I have in there? But it's producing a dividend. I like that. I only have 100 of like nothing in there, but I'm just gonna dollar cost average into it little by little. Maybe buy a dip here and there, and then I have my my yielders. I've got JEPQ, SCHD, core portfolio stuff. I'm reinvesting into those. Those are all on drip. TLTD I really like. I don't necessarily recommend it to anyone. I just like it. It's done really well. AUMI, I like gold. It's, again, not necessarily a recommendation, but it's up 14%. I'm a fan of it. I like gold. I'm going to hopefully buy more of it over time. My dollar cost average. Well, actually, you can't. Actually, you can only buy shares, full shares. So, yeah, we'll see what happens with that. And then I have my real estate plays. Then I have my yield maxers. And again, I don't really recommend yield max. But I'm experimenting with them because long term I might kind of push into them, and I want to know what the best one is. Ulti seems to be the best one now, as well as YMAX. They've been pretty stable and they pay every week. YMAX is okay, I guess, but I just don't like it that much. I think it's just not performing as well as YMAX. Although right now it's looking like it's better in terms of only -15 versus -16. So it doesn't produce as much or as well and as consistently. Misty has been pretty good, but it's still -30, so it's not that good. And then Coney I thought it was a disaster, and then I put in a spreadsheet and realized that I'm up. It's already paid off, and I'm basically just getting free money at this point. So if you think of it as like you bought this house and like it's not that great and it depreciates in value, but people keep paying you rent. If you think of it that way, then Coney, for me at least, has been a good investment, and as long as it exists, it will be producing me money. And then the bottom two are just wheel stocks that I'm kind of wheeling in. Net Power, I kind of don't want to lose my shares because I think it's actually a pretty good stock. So we'll see what happens. But Missed You, I'm pretty sure that's just basically MSTR. That's going to come up. So anyway, yeah, I have outperformed the S&P 500 with my methods. I haven't quite hit the goals I want yet, but I'm just happy to see that. It's just kind of nice to know that I didn't totally waste my time with options, because I am profitable and I am beating the S&P 500, but not by as much as I want. I want to beat it by, I want to basically get 30%, 36% per year or better. And I don't think I'll hit it this year, but I think next year I will. And without taking outsized risk, and that way I can kind of prove that strategic investing is better than investing in the markets, and you can do it in a way that isn't risky or is even less risky, especially because I hedge. It's less risky than the market. So my advice still remains the same for everyone, is to invest in long-term index funds from a company that's reputable and that doesn't have a massive expense ratio. So Vanguard is what I'm doing with the VU. I'm also using Schwab, and I'm using JP Morgan. So those three are pretty reputable companies. That's still my advice, and I'm still doing it. But on top of that, you can generate a lot of earnings and beat the market by basically employing the strategies that I've been doing. You can see 20% in 3 months. That's basically what I've been tracking. And my experimentation is basically over at this point. I know what I need to do. You capture the market, you capture dividend growth, and kind of classically invest into that. Then on the side, you're running short-term wheel options. You're short-term as in 3 months or less, and then you're running long-term leap options, which is essentially, I guess it's about 6 for me. I've been doing longer-term, 6 months plus, because leaps are technically more than a year, and I'm also participating in leaps, which you just have to realize they're not. I guess I only have one leap on, which is this guy, and it's negative, but that's neither here nor there. I'm pretty sure I already profited off of this idea before, and I'm just kind of rebuilding the play. But anyway, so long-term options, like next year, it's almost a year, so 6 months plus, and kind of using these longer-term long calls to generate income, so theoretically at 30%, honestly, I should probably close this, because 30% that's a really good yield. So imagine I had my entire portfolio in here. Wait, okay. So double check current price in the top right here is 88. So I want to get close to 88. So 85 is probably the closest we're going to get, and we're missing out on a few dollars, $9, but I don't care about $9. So there it is, realized profit, $54, which is roughly 30-something%. So, yeah, I'm just cashing out piece by piece. And if we look at options, I'll look at that later. We could see our realized profits have been pretty good. And then buying power, I'm trying to get my options collateral down. Really, I'm trying to get my cash up so I can start withdrawing, because that would help a lot. So hoping to close a lot of positions in the next week or two, and just stack up cash so I can start to really invest, because I expect there to be a pullback in the market in the next couple months. December is usually a bad month in terms of things drop and pull back, and people don't really buy in the stock market because it's like the end of the year, people are cashing out, it's basically institutional movements. So that's my plan going forward, is cash out now, keep my positions in terms of actual investments. I'm not actually selling any of my shares of anything. I'm just closing all my options and then kind of sitting on it and slowly dollar cost averaging into, stable investments like I just showed you, the VU, JEPQ, SCHD, and then collecting those dividends. So that's my plan. Invest, collect those dividends, and use option strategies and win. So yeah, all-time high. Love it. Peace.